The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to the show from the offices of Duke & Duke, 100 South Broadway, Philadelphia, Pennsylvania. We're going to start the show like we usually do with the German DAX. As you can see, we just hit a 61% retracement there this morning and started to sell off. If we take a look at the FTSE, we pretty much were watching that one. If you'll remember, yesterday we were talking about that it was acting weaker. And you notice that it only made a 50% retracement. It didn't quite complete the ABCD. The ABCD would have taken it to the 61% retracement, but you'll notice that for a period of 3 days there, between the 26th and the 29th, it had a great deal of trouble getting through the 7640 level in the DAX. Should it get above that, that would be a relatively bullish sign. So we'll have to take a look at what's going to happen tomorrow as we look at this. Now, a lot of things are happening today, folks. One of the first questions that I had is, why don't the patterns work all the time? Let's just go through that for just a little bit. They can't work all the time, or this wouldn't work at all, because it's all based on probability. I mean, it really is. There's no 100% out there. There never will be. If you're looking for it, you might as well not waste your time. I spent probably 20 years looking at astrology trying to find something. I find little tiny bits and pieces, but still never able to put the puzzle together, but nobody else has been able to do it either. That's why I sort of rely on the patterns. Just take a look at here. Let's just look at the first one here, which is a failed pattern. We have a perfect ABCD pattern. This was Monday, folks. This was Monday. We're right at the 75.32 level. We're setting right at a perfect ABCD. And what did it do? It went a bit higher to the tune of about 100 points. No, not quite, about 80 points higher. The key here is that once it gets 20 points higher than that D point, which is $400, you're flat out wrong. You can't stand in front of that. That's not a very smart thing to do. And it kept going higher and higher. If you remember, those of you that get the newsletter, I was expecting the market to be strong into Sunday and Monday. And of course, it continued into Tuesday, which is not unusual, but I don't think anything's changed on what I said in the letter. I think that we're looking at something of a major top in this area. But again, that's my opinion, and that's pretty much what you're looking at. Now, when these patterns fail, they fail badly, but when they work, sometimes they work pretty good. Here's one that we were looking at yesterday. We were fortunate enough to buy this at a pretty good price, thanks to our good friend, Mr. Z. This was the Christmas wheat. You'll notice that it had a perfect ABCD pattern down there at that 520, 519 level. We've now rallied. We got all the way up to 544 this morning. It's up over $1,000 in one day. So that usually means something important. So I would suggest if you had to have bought that, make sure you protect yourself to the tune of about $250. In other words, put a stop somewhere around that 525 level, because you don't know what's going to happen next. And with all these things that are happening with tariffs and all the other stuff and the trade agreements, anything can be changed here in any particular format. Now, we've had very good news this morning on the economy. I guess the GDP has gone up to someone said 4.6. Is that what they said on Bloomberg? I thought I heard that in the background this morning, but that's very, very bullish news, and we're going to see what happens with some of these things. Now, I wanted to just go through a couple of markets here that we watch over a period of time, and one of them, of course, is I want to cover a few of these stocks. I just wanted to show you, I still think they're in these same topping patterns that I talked about long term. This is Microsoft. You'll see it's making another ABCD here this morning up here at that 110 and a half, 111 area. And if we take a look at a couple of the others, if we look at, I believe, we want to, of course, look at Apple, which just keeps going and going and going, but it's still within 1% of that target that we're looking at, which was 216. Now, whether that's going to continue from that level, anything is certainly possible. The one that looks very interesting, of course, is the S&P cash, and this is the one that very, very important because we had a big gap up on Monday. That took us up to that 1.618 level. That completed the huge ABCD pattern from February up into March, down into April, and then up into that ABCD area right there at the at 290, which is, of course, 2,900 in the E-mini S&P. So those are just some of the ones that we're sort of following here this morning, which may or may not be important. So we'll as we go through some of these other this morning, I think it'll make a little bit more sense. I did want to bring what I think is a very, very important one, even though it's a much smaller market, and that is the Russell 2000. This is a, if you'll notice here, we have a beautiful butterfly pattern. You'll notice that the high that we made on Monday was a 1.618 expansion there at the 173 and change level. So that could be a very, very important point. But this is one of the reasons why I was expecting the market to be higher on Sunday or Monday, is because of the fact that this Russell had not quite completed, nor had the S&P. I guess it had to make that 2,900 level in order to and it got to 2,906, I believe, in the S&P. So we'll see if this is going to be anything at all other than what we're looking at. Someone's asking a question: have you ever seen a market with no significant corrections or pullbacks? 15 for years? Yeah, well, for years? No. If you're looking at any market, the question is, have I ever seen a market with no significant corrections or pullbacks for years? No. I mean, not a major market. Not a major market. And believe me, I've looked at everything. Anything that's actively traded. If you looked at the interest rates from the 80s, when we bottomed down there, when Treasury bonds got to 50% of their value, bonds were trading around 56. It went up, but it still had corrections all the way. We had ABCD corrections. Maybe they were small, but they were still there. And we've seen this move up all the way. I mean, we had a tremendous buy signal, the week of the election last year. I mean, that was a monster buy signal. And we had another one in December of this last year. So they come and go. But as far as these markets, anything that's liquid and actively traded, I firmly believe it works off of natural law. I mean, look how it hits these numbers, folks. They can't do that by accident. If it were random, it would look like something from a Jackson Pollock painting. So that's, and I'm looking the one on the wall that I have here, the original. But anyway, and that's, of course, that's a joke. But anyway, if we look at these charts one at a time, you're going to see that they do exhibit these things. This is the reason why I like the euro so very much, and we're going to cover the euro and the gold when we get back from the break here. We got to pay a few bills. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. We're going to take a look at the euro and the relationship to gold. But guys, I think it's really important, especially if you're a shorter-term trader. You want to pay attention to some of these because they have such a strong affinity to one another. If you'll notice here yesterday, this is what we were looking at in the euro. If you'll notice the 78% level that's just right above that high there at 117.18. It hit the exact number yesterday, folks, at 117.31. The high, I believe, was 117.33. We've now backed off 80 pips down to the 116.50 level. We're already starting to rally off of that. But as you'll notice here, since the 15th of August, when we made the big 1.618 expansion, we have 382 retracements all the way through here. We had another one this morning, so that's why we want to be watching that. Oh, by gosh, we've got a caller, one of our favorite people from Philadelphia, Mr. Z. How you doing this morning?
Larry, thank you very much. I'm very well. Yourself?
Pretty good. You enjoying that wheat move? Nice call on that, John. You told everybody in the room about that, so I hope some of them paid attention to it because it's moved well over $1,200 here in just one day, so there must be something going on in the wheat. What can I help you with, my friend?
Larry, you just mentioned the euro just made a peak at, made a high, maybe not a peak, but a high at 117.30.
Yes.
I'll also observe the past 5 weeks have been interesting. We started that Monday, July 30, right here at 117.50. We fell hard for 12 days down to 113. That level where it bottomed was what you had pointed out many times in advance, and then afterwards that was that fib 1618 expansion mark. From 113, it's rallied right back to 117 and changed. So it was 117.5 down, right back up. Where, given it's done that, and I'll just point out, I I've never known how to use this pattern as a trading vehicle, but that is exactly the pattern that Basil highlights many times. In other words, it is an exact price-time match, I believe, are the words he uses to describe it. Anyway, now that it's done that, does this imply anything looking ahead, the next 4 to 8 weeks?
Oh, I can't go that far out into the future, John. But all I can tell you is, I'm watching this on a 4-hour chart, and every correction has not been more than 80 pips. That's about the most we've received. We got 80 pips here last night when we got down to the 116.50 level. Again, right at a major Fibonacci point. And if you remember from Basil's show on Monday, he talked about the relationship to the U.S. dollar and the euro, and that U.S. dollar index was at that 94.50 level, and it stopped exactly there. And as the dollar's rallied a little bit up to the 95 level. So this is a key level, of course, at this 117.30. Any move above that, you're going to be looking at a tremendous move. Now, one other thing that I didn't mention when we were talking about the euro, because it was only a 4-hour chart, I posted in the newsletter this week the fact that that 113 level was a 61% retracement on the weekly chart. And that's very important. That was the weekly 61% retracement of the whole year's range. And to me, that is important, especially since we've come out of here 4 handles very, very quickly. So that's what I'm looking at.
Yes, indeed. I wanted to follow up and ask you, in the conversations you routinely have with all your collaborators, clients, students, and friends over in the UK or the continent, is anybody giving you inputs about the potential future importance of the negotiations going on between Moscow and Berlin? There's talk of integrating financial systems more closely. Any input you're getting from those people you speak to over there on that topic?
Yes, John, I get those every day, but unfortunately, if I told you what they were, I'd have to have you whacked, and I love you too much to have that, and I can't share. I can't share. You set yourself up for that one, pal. No, I don't.
Yes, I did.
Here out in the desert here with the big full moon here, they really don't know where I live anymore because I change addresses every few days. But no, I don't know any. John, I'm actually in my 7th decade. I started in the 50s, and I have never received a tip, inside information or a tip that worked. I mean, never. I mean, like zero. Maybe someone's given me one, and they told me to buy Bitcoin at 22 cents, and maybe I just shaked it off. But I can never remember a legitimate one where someone said, "Look, I got some great information on this one. It looks like it's going to be pretty good." I have never gotten one that was good, which goes along with the book by Jesse Livermore, Reminiscence as a Stock Operator. The only thing I know, John, are the prices. I watch the patterns. Sometimes they work, sometimes they don't. And that's really, what the edge is, and I try to, I just try to look at that. That's really what I'm looking at. I don't know any more than that, but it was a good question anyway. The only one
Larry, I'm reminded of that quote, whether it was said by him or just falsely attributed. I liked it nonetheless. It was the quote from Yasser Arafat, who never slept in the same place twice. So maybe there's some utility in that operation. Who knows?
Well, Hugh Hefner did the same thing, and look at him. He lived a long, healthy life, so what are you going to do,
Exactly.
John, I have one other question.
Okay, very good on that.
What are you hearing about the hog market, John?
I'm finished. Sorry about that.
No, I don't want you to be finished. I want you to know what you're hearing about the hog market, because we've had a pretty big move, the last couple of days, a little bit of a pausing here, but it looks like they have some serious problems in China with this hog problem.
Yeah, Larry, I've placed this idea in print in the Tiger's Den. The direct answer to your question is I do not know. What I can say is I am trading and scrutinizing the action in the price of the February and April 2019 hog futures contracts. Reason I'm doing that is I know the news and my intelligence on developments surrounding the hog herd in China is very poor. And I don't even go looking much for that news, knowing full well my odds of finding accurate news is incredibly low, so I'm not even going to waste my time. What I can say is I do recall very vividly, I've gone back and studied the price charts and the news, back in late 2013 when a disease hit the pig crop, the pig population in the U.S., driving spot hog futures prices from 60, 70 up to 130. And
we got to pay a few bills here, John. Can you stay with us?
Sure can.
Okay, great. Thank you. Mr. Z from Philadelphia on the line, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back and we're talking with Mr. Z from Philadelphia. John, could we switch over to natural gas for a minute? I know that's something that you have a strong interest in, and it looks like we have a pretty bullish pattern here. What's your feeling here?
Yes, well, as you know, I'm carrying a January 2019 contract and holding that for a couple of weeks now from lower levels. And I just bought a second contract here this morning. In the October, buying that spot month. I do agree that decline that's occurred the past 7 trading days looks like it's coming to nice fib support, sets up a nice low risk buy. If you're wrong, you don't lose much. So that's what I see. How about you?
I see the same thing. In fact, if we can get above that level of $3, I think it's got a chance to really have one heck of a run. We could get as high as maybe 4.25, because long term, this has been in this area for a long time and has held up extremely well. So that's the way it looks from my perspective. John, do you hear anything about the wheat? We're up 23 cents off the bottom that we made on Monday. Anything you hear on the fundamental side that the folks might want to listen to?
The decline that's occurred the past 3 weeks, I believe the most recent high occurred August 6th. Up at those highs, funds and speculators were buying with the idea of a breakout surge coming, responding to rumors. I repeat, rumors that the Russian and Ukrainian exporters were going to stop exports because their crop sizes are lower because of drought this past summer. Turned out those rumors were false in terms of cessation of exports. And so speculators had bought those highs hook, line, and sinker. And it's those players who got emotional and chased it, who are taking their lumps and dumping their positions the past 3 weeks at, frankly, massive losses given the 60 cent or 70 cent price decline combined with the tens upon tens of thousands of contracts that they bought up there. So the decline is that reversal of that speculative position. And it wouldn't have gone this deeply lower is my guess, and it's only a guess, if speculators hadn't bought it hook, line, and sinker 3 weeks ago.
John,
that said, this accelerated selling, especially since a week ago Sunday night, is just the buy opportunity as I see it. Because it was that group of players who were saying, I just can't stand the pain. I'm going to get fired. I'm going to lose my house, my wife, my car, as you sometimes say, with accelerating losses, which drove the price down as low as it did. So to me, that's just a gift in terms of low price to buy. So that's what I see.
It sounds like fake news has arrived at the commodity markets.
Well, I think you've known that all along since back in the 60s.
Yeah. Hey, John, thanks for joining us, buddy. We'll talk to you soon, okay?
Thanks so much.
You bet. Okay, that was Mr. Z from Philadelphia. We now have another caller from Florida. Mike, are you there?
Yes, I am, Larry. Larry, I see we pulled back a little bit in gold, and do you think that our little pullback is done, or we have more to go at this point?
No, I think we've got more to go. I'm going to post a chart here in the room that you might want to look at a little bit later, Mike. Basically, you can see where the euro made that 78% retracement and then backed off a little bit. And the correlation between the gold and the euro is just amazing, because when the euro hit 117.31, the gold hit 12.21, and then it backed off $14. So they're following together. When the euro bottomed at 116.50, which was another 382 retracement, it held. So as long as we stay above 116.50 in the euro, I believe that we're still heading higher. I don't see any reason. The gold has come out of here so strongly, Mike, that this is exactly, the kind of thing that you like to see. So you just sort of sit on your hands and not try to, get too cute. That's basically, the bottom line, the way I look at it.
Okay, I know yesterday you threw out a couple target prices that you thought could be the bottom of the pullback in gold. One was 1197.
Yes.
Have those values changed any, or
No, they have not.
What areas do you think again that gold could pull back to at this?
Gold has a tendency to repeat itself over and over again, and between the 21st and the 24th, we had a $19 pullback. So I'd be looking somewhere of a $17 pullback. That would take us down to about 1203. We got down to 1206 last night, which is not quite enough, but I still think that's outstanding. But we're still looking at an ABCD structure in the gold, taking us up to 1232. But if you just look at the long-term daily chart on this, I mean, I'll bring this up to let the folks see it, but we came out of this bottom at the 78% level, really strong, much stronger than we did in December of 17 or December of 18. December of 16 and December of 17. Both of those came out really strongly, but this one's gained in 8 days. It's gained $50. That's more than we ever did in either of those two bottoms. So that to me sounds pretty good. Plus, the whole world doesn't like gold and silver anymore. So that's the way it looks anyway. I could be wrong, but that's what I'm looking at.
Okay. Well, like I said, I've had some gold stocks, and yesterday morning, and I sold some of them, and I'm looking to get back in. So I'm looking for, good area to get back in. So
then wait for your pullback, and I think you'll probably get one. And it'll be pretty hard to buy it because nobody else will want them B2. But if you get that $17, $18 pullback in gold, I think that's something to look at. It'd be right around the $1,200 to $1,197 level would be my guess, somewhere in that ballpark. And of course, if we get below 1187, then there's a problem in River City. So just be careful because if it reverses and takes out those lows, that's not going to be very good for the economy and especially for gold. So we'll see whether that holds or not.
Well, thanks very much for the parameters, Larry.
Okay, thanks for calling in, Mike. Always like hearing from you. Okay, folks, we want to move on to the U.S. dollar. I wanted to bring to your attention here when Mr. Basil Chapman was on Monday, he talked about the importance of that level of 94.50. That was the low so far this week. We're still in that zone between 95 and 95.20 and 94.50. The key to hold this whole thing now on the upside remains with the euro. That 78% level. And believe me, folks, we came out of here like a rocket from 112 to 117.30 with the only thing we had was a couple of 50 and 80 point pullbacks over the past 2 weeks. So this is telling you this is a very, very bullish structure in the euro. Maybe it changes, and if it does, the charts will tell us that. But right now, it's not telling us that. It's telling us that it wants to go higher. So let's wait and see what it does. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Folks, I posted a chart of the crude oil here because I wanted you to pay attention to the little blue triangles that you see that bring you down into that major support that we had between 64.50 and 65. It went a tad below that by about $0.50 a barrel, but it's had a very, very strong rally, and we're coming into some really strong resistance. Hold on just a second. I don't think I've done anything wrong as far as the audio, have I? Nope, nothing's different. 10-4. Okay, sorry. I don't know what the problem was. Anyway, the crude oil chart shows you that there was a great deal of support in that area, and of course we were trying to give you an idea that that's really what that was. Now we're coming into an area where we're looking at some pretty significant resistance up here between right around $70, $69.70 to $70 per barrel in the crude oil, and that's going to be a very, very interesting one to watch. So it might hit it today because we're less than $1 a barrel away from that. So pay a relatively good attention to that. Regarding some of these grain markets that have been tremendously oversold, a lot of that is related to tariffs coming out of Canada and whatever. And of course, the next on the list will certainly be China. And the thing is, it seems to be putting things together. At least looks like we're getting a better deal than we had before. I don't know, but that's just the news. The markets are reacting incredibly well. They don't seem to miss anything as far as anything bad or whatever. It just keeps going higher and higher. These patterns in the stock market, to me, are making something of a major top in here, but they haven't got the memo yet. I don't understand. I've delivered it twice. I sent it out Sunday, Monday, Tuesday. Today's Wednesday. The mail must not be delivered there at the Wall and Broad there in New York, but it's hot. Maybe that's why the mailman is not working this week. Someone's asked a question about the Dow Jones transports, because we did go up. And we did make, this I think is either really important here, folks, because the Dow Jones transportations on Monday did go up and made a slightly higher high. At that point, we had a double top, a butterfly top, and a three drive pattern, as you can see. So we did make another higher high. We didn't follow through on the upside. Whether that is a false sign or maybe the high came in a day later, I don't know the answer to that. All I can tell you is it's looking like, some major things are happening, and whether that's going to be the case or not, the trading gods will tell us. And of course, God doesn't trade anymore because she's too busy trying to get the rest of the world straight. Anyway, let's move on to one other market that I think is important, because this is the Minneapolis. I want to bring Minneapolis wheat to your attention here because one of our listeners has asked us to take a look at it. We've already seen the move that we had in the Chicago wheat, and you can see the ABCD structure coming in at the 61% retracement on the Minneapolis wheat, and it hasn't moved yet. So, maybe that's signifying that the wheat market for Minneapolis wheat is not nearly as strong as for Chicago. That's what it's telling us right now as we look. Regarding someone's asked a question about the livestock market, and I believe if we take a look here at the December cattle, Mr. Z was looking to buy that today. You'll notice here that we are right down into that support level, 110.70. I believe we hit that spot on this morning. So that should be good support in the Christmas cattle, because you've had a beautiful 61% pullback ABCD fashion, and that makes it a Gartley pattern. And that also is actually the first ABCD correction that we've had since our bottom was made way back in May. So this could be a very significant point here in the December cattle. Now, if we get below 110 level, the jury is going to come back with a guilty verdict on this one, because it would be a sign that we're probably going to go lower. But right now, that's what we're looking at. So we'll see. We got a caller from Singapore. William, how are you?
Oh, I'm great, Mr. Pesavento. Thanks for picking up my call. And I just heard you talking about the gold with Mr.
Yes.
Z, and you mentioned about the harmonic numbers about 17, take from the high of 1220.7, which is about 1203, and we have not reached there yet, which I think we got up to a low of 1205. However, I was thinking to check with you that I actually look at it, from another, using the Fibonacci, and I used another reference point, and that was a hourly chart on the, let me see which day was this. This was on August 23rd at about 8 p.m. We have a low of 1189.5. If I use that, to the high of 1220.7, the 50% mark, is happen to be 1205, around there.
Yes.
So would that also be able to,
Yes,
say
absolutely.
that we might have reached the low?
Yes,
for the correction?
that certainly could be, because if you compare it to what happened in the euro, it would be very similar to that. Yes, 1205 is a 50% retracement. It would have been nice if it went to 1203, because then you would have been down $17. That would have been a perfect setup,
Yes.
but the market's not always perfect. But that's very good analysis, William. I think that was a really good spot, and it's rallied $7 already this morning, so that tells you something was certainly there.
Okay, but could I say that we are still not really out of the wood yet, which means that it's possible that it can be also moving downwards from here to reach the 1203 level. So
Sure.
I'm thinking, under what circumstances that we may say that the downward movement may have completed, which means, could I say that if we can cross the high of 1220 decisively and reach, there will be a possibility that we may not reverse down further?
Well, what we're waiting for, William, is a first ABCD correction. We had a small one, of course, at the 1189 level. Now we're waiting for the second one, and that's what I have to wait on that, because, I don't look at the fundamentals, and I wait just for the patterns, and
Sure.
I'm waiting to see for the ABCD pattern to form, and that's what I'm really looking for.
Oh, okay, I got it. Thank you very much, Mr. Pesavento.
Okay.
Really thank you for sharing with us all your expertise
bet.
about all this technical analysis.
And your friend Sarah says hello, and to have some durian for her.
Oh, sure. We have a durians, what I call seasons, which we have not seen before, and the harvest are really marvelous. So anytime come to Singapore, I will definitely take you there. She will be fed with lots of durians, and the quality was very, very good. And I hope to see you coming to Singapore.
Well, we hope to get back to see you. You've always been a gracious host, and we hope to see you one of these days soon. Thanks, William, for calling in. It was fun to talk to you again.
Thank you.
You bet. Folks, durian is a fruit, a Chinese fruit, and it has an odor that is like 7 times worse than garlic. It has a terrific taste, they tell me, but woo, boy, oh boy, you don't have to worry about burglars if you're eating durian. They all stay away from you. In fact, cab drivers make you put the stuff in the trunk. They won't even let you carry it in the cabs over there. So it's really funny. But I'm not a durian person, but those of you that like it, who knows? Who knows? Oh.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. I wanted to expand on that crude oil chart. I posted it in the room so you could take a look at it. We're right at the 50% retracement on this move at the 69.80 level. The heating oil has already rallied to the 61% retracement. In other words, it's leading the market, which is very contra-seasonal because heating oil usually doesn't start moving strongly until the late fall, October, November period. So this is very, very interesting. But watch the crude oil when we get up to that 69.80 level. We're about 80 cents away. We're up about a half a buck today. Well, it's about 60 cents today, but we could easily make that 69.80 level. So pay very, very close attention to it, because that'll match the high from early August, and I'm sure there's going to be some buy stops in that area. Well, I'm not sure, but I'm assuming there might be, because of the fact that it's a good chart point that people will probably be looking at. It's very close to that $70 a barrel level that we've been talking about here since Monday and then also today. So keep an eye on that one. Also remember that I still believe that we're making some major pattern tops in some of these stock indices. Nothing's really changed. There's a few stocks like Apple and Amazon and Microsoft. Those are the, those 6 stocks, the FANG stocks plus Microsoft, are the ones that are pushing this market higher. But we did make new highs in the S&P cash, so that's a very interesting thing to watch too. So, and believe me, I could certainly be wrong, and I will be the first to, well, I won't be the first because I get 25 emails a day about it. Anyway, we'll keep an eye on these because I think we're at a really interesting level here. But the crude oil, the key level to watch is $69.80 to $70 a barrel. If we close above that, we're on our way, but right now, I believe that we still got some room to the upside here to get to that level. So we'll have to wait and see. The Canadian dollar, folks, we're still waiting for the 128.60 level. We got down to 188.85. Live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!